When the business of banking was first created, it wasn't something glamorous or flashy where you could earn large sums of money. It was a fucking snooze, filled with losers. Well, maybe some things never change. We all know about banks. It's a place where you can stash your cash and earn a couple bucks in interest every 30 years. Boring. You can rest easy knowing that some trusted third party has both all your money as well as your best interest in mind. But once fractional reserve banking was implemented, everything changed. You might not know what it is or how it impacts you, but it's impacted you and your family more than the internet, World War II, and 9/11 combined. Now you might be saying to yourself, that sounds a little bit sensationalized. And yeah, it is. Now fuck off. Over time, the business of banking mutated from a boring and safe business to something that lacks almost all resemblance to its previously benign form. And America barely noticed when boring old banking became one of the largest industries in the world, now making up 5 of the top 10 most profitable businesses last year, as well as having ties to almost every major business and government in the world, as well as being responsible for the vast majority of all money creation. In the end, fractional reserve banking crippled the world's reserve currency, robbing the bottom 50% of their hard-earned savings that they spent over a third of their life trying to make. And none of the leaders or talking heads had a clue what was going on, as the US dollar lost over 90% of its value in the last half century.
Strong because the US economy.
I'm guessing most of you still don't know how this happened, or how the rich just seem to get infinitely richer while you're still scraping by. Yeah, you have some soundbite you repeat so you don't sound dumb, but come on.
I don't piss on my wife, if that's what you're asking.
But there was some who saw this coming. While all the bankers, leaders, and modern monetary theory proponents were out not worrying about the consequences of their actions, there were some outsiders and weirdos that noticed what everyone else ignored. They saw the giant lie at the heart of the world's economy and saw it by doing what the rest of the suckers never thought to do. We looked. Do you ever wonder how stuff used to be so cheap? How you could have bought a Big Mac for 65 cents in 1970, but it costs $6.50 now? Has McDonald's made their burgers 10 times more valuable over the past 50 years? Or has our currency just been devalued by 90%? Now I know, 90%, that's insane. I would have heard about this on the news. And that's a fair point. But when it comes to inflation, there are 3 main camps that appear on the mainstream news. There are the non-believers, the modern monetary theory lovers, and Keynesians that think we can print our way out of every problem.
The American people are tired of women.
And then you got the doomsday preppers who think that the sky is falling. But the reason why this stuff isn't more widely talked about, besides the fact that we have an epidemic of financial literacy that's perpetrated by the government and bankers who benefit from our collective ignorance, is because
it's all part of the plan.
The government says that there's going to be a 2.5% annual inflation rate, which everyone just accepts.
Even if the plan is horrifying.
So no one freaks out when the government essentially Thanos snaps half of your savings away.
It's gone.
Okay, so inflation is bad because it robs the wealth away from the bottom 50% who don't own any assets, live paycheck to paycheck, and save what they can, while simultaneously increasing the prices of hard assets, therefore making the gap between the haves and the have-nots even larger. But why does this happen, and how do banks play a part in it? Now you most likely think you know how money is created, or you've been fed some lie by the Fed that money is simply printed in different mints around the country and then somehow gets distributed to the common folk like you and me. While this is accurate to some extent, it is only the tip of the proverbial iceberg, the rest of which we'll discuss throughout this video. The unfortunate truth is that our banking and monetary system relies on the fact that over 50% of the entire population is clueless to the way in which it operates. Now, this might sound like I pulled this statistic out of my ass, and yes, true, I did, but that doesn't discount the truth in what I'm saying. However, it wasn't always like this. Somehow, somewhere, we decided to just let the banks and governments do their thing and just trust that they have our best interests in mind, despite the overwhelming evidence against us. We turned a blind eye as banking became America's biggest and most profitable industry, as we became more focused on keeping up with the Kardashians rather than the growing Fed balance sheet. But if you don't believe me about that 50% figure, let me ask you 3 basic questions about money. What percentage of the US dollar is cash versus digital? How long has it taken us to most recently double our money supply? And lastly, how are the majority of new dollars created? I'd honestly be surprised if you get all these questions right, because I know I didn't when I started my journey to become financially literate. And don't feel bad if you don't either. You guys made the first step. You were curious, and that's why you're listening to some random guy on the internet tell you about the flaws in the world's reserve currency and how the leaders that we trusted betrayed us for short-term gain. So what do you guys think the breakdown is for cash versus digital dollar? 25-75, 50-50, 75-25, 90-10? I'll give you a second. Okay, seconds up. The answer is that over 90% of the US dollar is completely digital. Now, this might surprise you, as I know it surprised me when I first found this out, especially because a couple months ago, when I had my Zoom call with my family for my 21st birthday, I gave everyone a prediction. I said that within the next decade, we would be in a completely cashless society. Yes, this is what I talk about on my birthday, and before you ask, yes, I'm Jewish. Despite this, nobody agreed with me, and instead they said that if anything, cash would just decrease to a rate of 25% in the next 10 years. At this point, I didn't even know the truth, but it wasn't until recently that I learned that we surpassed this threshold of 75% of our money being completely digital long ago, with almost everyone not even knowing. And this is not slowing down whatsoever, as earlier in October, the International Monetary Fund announced a new Bretton Woods moment, and coincidentally submitted a paper right after discussing central bank digital currencies, or CBDCs.
We must seize this new Bretton Woods moment.
But that's a story for another video. Additionally, I know from my experience that a large portion of people still believe that the US dollar is backed by gold, even though that we've been completely off the gold standard for 50 years and not been fully backed by it by around 90. Most of my family members that I have talked to, even those most would consider to be fairly well off, have little to no understanding of the money that they've spent the majority of their lives working for. Like we discussed in our previous video, the US dollar in its current state is an irredeemable government fiat money, which represents the debts that the government owes yet can never be paid back, and can have its supply inflated instantly by the will of those in charge, which basically means that the money that people give up a third of their lives to earn is entirely based upon trust in the government and the system that keeps them in power. But once you start to pull on these loose threads, the whole system that has propped up our currency, stock market, and real estate for decades, it all begins to unravel. This brings us to the next answer, which is that we've completely doubled the money supply in only the past 7 years. Before then, it took around 14 years for the money supply to double, which just illuminates the severe exponential growth that we are seeing. We'll discuss the consequences and why the government loves this sort of inflation, in our next video in this series. But until then, let's discuss how the majority of money is created. And like I alluded to earlier, this is done by the banks through a system called fractional reserve banking. Now, regardless of if you've heard this term before, you most likely know what it means, and if not, it's pretty self-explanatory. Essentially, it describes the amount of deposits that a bank must hold in its reserves, which is represented by a fraction of the total deposits. That number is 10%, allowing for the other 90% to be lent out. But that doesn't really explain how money is created. So let's take a closer look at how fractional reserve banking works and how it facilitates the exponential growth in the supply of our currency and in turn the decay of its value. To do that, let's simplify this into a scenario with 3 individuals: a local gang, yourself, and the bank. And for simplicity's sake, we'll start with only $10,000. So at the starting point, the bank has nothing, you have $10,000, and the gang has a genius business idea. Now you deposit this $10,000 into your bank account because that's the responsible thing to do, which the bank will then take $9,000 of to loan out. So then the gang comes into the bank and asks for a small business loan for
Gasoline.
which the banker will clearly approve.
Absolutely.
There's now $9,000 new dollars in the banking system. You have your $10,000, the gang has their $9,000 in the form of a business loan that will eventually need to be paid back to the bank with interest. But in the meantime, you still have all your money that you can theoretically withdraw, and they have their cash for business use.
Yeah.
So the entire money supply has almost doubled instantly with only 3 individuals. So now this will continue many different times, which will eventually result in that original deposit of $10,000 turning into $100,000, therefore multiplying the money supply by 10. And this is due to something called the multiplier effect. Now remember, this is only 3 individuals. Around 80% of Americans are banked. So imagine this scenario, but with over 250 million individuals. And you'll begin to understand how it is possible for the money supply to double in only the past 7 years, with over 22% of all dollars being created in 2020.
Okay.
Okay, so I kind of lied. I said that the fractional reserve requirement was 10%, which was true for most of recent history. Yet in March of this year, we effectively made the fractional reserve requirement 0%.
Is that right? Yeah.
But so what? Banks are safe, right? I mean, sure, if you hate money. But now you're probably thinking, what about FDIC insurance? Won't that protect you? And like most things about money and finance, the answer is both yes and no. Let's say the bank you use goes out of business because they made some very risky bets, or even did something illegal. Which is surprisingly going to be the best case scenario for you. The worst would be something called a bank run, which we'll discuss shortly. The question that needs to be asked first is, why did the bank make those bets in the first place? And while the answer to this is very complex and multifaceted, it all stems from a lack of skin in the game. Now, you're probably asking yourself, what the fuck is skin in the game? And to explain this, we have Eric Andre and Hannibal Burrs.
Am I right, ladies? Who killed Hannibal?
What's wrong? What is up with you?
This essentially describes a situation high-ranking insiders have their money on the line too. The fact that bankers don't have any skin in the game allows them to only ever see upside and have nothing to fear in the case that they lose your money. But it's not all bad, because they make these risky bets for a reason. And that's because they pay higher interest due to the inherent risk, which can be upwards of 25%, of which the depositors will be handsomely rewarded by the largest banks in America with a generous offering of 9/100% on savings accounts. Sweet, right? But I did say that this is going to be the best case. So the worst case is what is called a bank run, which occurs when a large portion of the depositors attempt to withdraw their money all at once. Now, this has happened various times throughout history, namely during economic recessions, specifically when a large portion of people lose their jobs or are unable to work and therefore need their money now. I know, this might be hard to imagine, but bear with me. And based on what we now understand about fractional reserve banking, they don't have any of this money. If government issued irredeemable fiat money were the match, and fractional reserve banking were the kerosene-soaked rags, then the 0% required reserves were the atomic bomb, with the drunk president holding his finger over the button that can collapse the value of the world's reserve currency and global economy at any moment.
No, but you're thinking of this place all wrong, as if I had the money back in a safe. The money's not here. Well, your money's in Joe's house, that's right next to yours, and in the Kennedy house, and Mrs. Maitland's house, and 100 others. You're lending them the money to build, and then they're going to pay it back to you as best they can. Now, what are you going to do, foreclose on them?
Okay, I need a drink. But this is where the FDIC comes in to save us. Because when the government fails us, the answer is always another government institution. The first line of defense for the FDIC is to sell your deposits to a different bank that didn't fail. But if there was some sort of global catastrophe or some sort of recession and there's a bank run, this most likely will not work. But you're in luck. The FDIC has some money to pay out just in case this happens. Which is why I actually called up the FDIC to find out how much they have and where this money comes from. So the first lady that picked up laughed me off the phone pretty quickly when I asked her where the money comes from, but the second person I talked to explained that they take an undisclosed percentage from all their bank's deposits. And currently that money is $108.9 billion. There's approximately $13,777,700,000,000 in the banking system. This means that there's less than 1% of the money that is currently in the banking system actually being safely stored for the eventuality of a currency crisis. So next time you see a sign saying FDIC insured up to $250K, I hope you take a second to consider the validity of that statement. But since we can always trust the government to hold up their end of every deal, they would never put the interests of these banks that are too big to fail first, while throwing the taxpayer under the bus, right? The only way to repay all the average Americans that would now have essentially no savings would be to create trillions of dollars out of thin air to then disperse to its citizens. And I know what you're thinking. This sounds crazy. I told you, this system relies on the fact that the vast majority of individuals do not understand how it works. Because if they did, well, I guess we'll just find out. Every day there's more people like yourself that are curious about how these systems that shape the way we live our lives work. As our implicit trust in the government and banks begin to erode, with the Great Recession being the catalyst for this growing distrust. But come on, our leaders aren't dumb.
So we wouldn't even use cash then, because cash is laundered all the time and used for nefarious that's all we've ever used for nefarious activities, and we certainly had plenty of them.
I don't think that's accurate at all. That cash is laundered all the time. We have the strongest.
Okay, maybe they're a little dumb, but they're not stupid. They wouldn't just do this because they're bored. In fact, the government and banks have a vested interest in weakening the dollar and maintaining or even expanding on this current level of inflation. Why, might you ask? Well, you're just going to have to stay tuned until my next video on the criminally profitable business of creating money.
You have to understand, most of these people are not ready to be unplugged. And many of them are so inert, so hopelessly dependent on the system that they will fight to protect it. Were you listening to me, Neo? Or were you looking at the woman in the red dress? I was. Look again.
Perfect.